Okay, good morning. Welcome to Stock Market Today for Wednesday, December 9th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider that hits your inbox every trading day before the market opens. U.S. equities higher again on Tuesday, as Monday's declines were reversed, and the S&P 500, the NASDAQ, and the Russell 2000 all finished at fresh all-time highs. Energy, healthcare, materials, and staples performed the best. Treasuries were mixed with the curve flattening. Dollar was flat on the major crosses. Gold finished up 50 basis points. WTI crude settled down 30 basis points on the day. However, as we get to the desk this morning, futures are higher once again. S&P 500 futures up by about 20 basis points after Asian equities were mostly higher overnight. South Korea up over 2%, Japan up over 1%. China did lag, though. They were down by 1% on the day. European equities are higher. Treasuries are weaker across the curve. Dollar weaker once again on the major crosses. Gold down 60 basis points. Crude oil up 1% to kick us off on a Wednesday that, as I said, started out 3 or 4 at all-time highs. SPY, Qs, IWM, all trading at all-time highs on a closing basis yesterday. Dow Jones Industrial Average, their ETF, the Diamonds, DIA, did not close at an all-time high yesterday, but it's within striking distance, right? So structure of the market has remained the same. Support for SPY at 360. Then below that at 340. As long as we're above 340, you're playing upside to 413, in my opinion. Qs, 260 is key. 280 is important. I think you're playing for 340 now in the Qs. I mean, it's fairly simple. Resistance at 300, support at 260. That's 40 points. Add 40 to 300. Get you 340 on the Qs. IWM, I think, just has a lot of upside left. Support is near 170, then 160 below that. So, as we're going to see a little bit later on in the show, the biggest knock on the market here right now is sentiment. Sentiment's frothy. There's no two ways about that. I can't get around it. It is what it is. The trend is higher, but everybody's bullish. So if that's your bear case, okay, it's a flimsy bear case, probably, right? But the simple fact of the matter is the bears are getting run over, and it's fascinating that there are still bears out there. Actually, if you kind of the dogmatically bearish people who just will refuse to see price, and price is trending higher. And I think what's happening is that things are actually getting better on the margin, right? So if you look at the absolute number of things, whether it's earnings in aggregate or it's economic data, they still look bad, but the market knows it's bad. What the market cares about is incrementally things appear to be getting better. And that's what's happening in the here and now. And bullish investors who factor that thinking into their equation and who would then key off of price are getting paid. And the bears are getting run over, and rightfully so. All right, let's check our market in a minute now. What are we writing about today? Well, we talked about this already. SPY, IWM, and Q traded all-time highs. Diamonds within striking distance. The rest of the world is also trading near record highs. Take a look at the ACWI XUS. We will a little bit later on in the show. It's broad, folks, and it's more than just a U.S. phenomena. The one knock, as I said, is that sentiment remains more greedy than fearful. And as I said, futures point to a slightly lower open today. We've been bouncing around a little bit. S&Ps are higher, NAS lower. So let's call it mixed. Major indices from a power bar perspective, Dow no longer pitching a shutout. It's 5-1 bulls to bears after it tacked on 36 basis points yesterday. S&P 500 up 30 bips, 126 to 43. NAS up 34 bips yesterday, 17-18. Look at the monster outperformance on the part of small caps, up 1.27%, 822 to 128 bulls to bears there. Bonds up 47 basis points, sending yields lower. Energy, once again, I mean, folks, at this point, I hope you're paying attention, right? I don't know how many times we can point out the fact that energy has been at the top of the list. According to the Chaikin Power Bar, small cap stocks and large cap stocks strongly bullish. Let's take a look at our stock of the day. Speaking of energy, this is an interesting one because it probably doesn't come to mind. A lot of people don't know this name. It's a smaller name, about a $500 million market cap. However, Heritage Crystal Clean, bullish, strong trend, strong industry group, comm services and supplies. However, dig in a little bit, and this is a closet environmental play. Dig in, see what they do. Re-refined oil. You take your car in to get the oil changed. That oil, the dirty oil, goes somewhere. It goes into a canister of some kind. Heritage Crystal Clean comes along, buys it cheap, re-refines it, and sells it. They recycle oil, folks. It's kind of interesting. More importantly, though, it's got that look. Here's that look, that trend I've been talking about. Interim highs in the summer, trade above them or near them while outperforming. Oversold, bullish money flow. Looks like an interesting setup here for a name that has some of the attributes that are popular from a thematic standpoint, in my opinion. You can call it clean tech. I wouldn't call it clean tech. I call it environmentally friendly. Not a lot of tech here, at least that I know of. But outperforming, oversold, bullish money flow looks kind of compelling. Sector movement now, last 5 days. There's energy, top of the list. 9% over the last 5 days, folks. That's outperformance. If you were paying attention. Remember last week, we told you services shifted here. Hopefully you got on board a little bit. Healthcare, fins, and industrials round out the top four. Tech, comms, staples, middle of the road. Materials, REITs, discretionary utilities are all lower. Utilities, real estate, staples near the bottom of the list. Those are your defensive groups. When you're bullish on the market, you love to see the defensive groups at the bottom of the relative performance rankings. If they're down absolute, like real estate and utilities, that's great too. But this is what you're looking for. This is the board you're looking for. Rally broadening out, incrementally better. It's global. Offense leading, cyclicals leading, defensive lagging. If you're making the bear case, it's pretty flimsy as far as I'm concerned. If you're hanging your hat on sentiment, maybe you get a couple percent, but I think you buy that weakness all day. Industry in focus. A couple weeks ago, we started talking about this one, and it still looks interesting. Insurance services, 30-3 bulls to bears there. Over the past 6 months, been a laggard, actually, down by 5.2%. However, that 30-3 bull bear ratio could be pointing at some outperformance to come. We'll see. Very strong. Currently ranked number 9 of 21 subsectors, down one slot. Everest Re, Allstate, and American Financial, all with very bullish ratings. All holdings in a fund that's beginning to shift. Has that look, right? There's that look again. Got a June high, got an interim summer high. We clear it. Outperforming, oversold. So bullish, outperforming, oversold. Money flow, some little punk, but the trend is strong above the rising long-term trend line. There's our 30-3 bull to bear ratio for an ETF that has a bullish rating. So I think if you're looking for ideas in financials, remember, financials are much more than just banks. If you're looking for ideas in the financial space, I think you'd be well served drilling down on what's happening with insurance. Take a look there. KIE is the ticker symbol of the insurance ETF. And there are 30 bullish stocks that you can take a look at. Fund itself, not the most liquid on earth, but I think I like it more for idea gen. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Equifax provided a fiscal 21 framework. I'm not sure if that's guidance, but it didn't matter. Investors like what they heard. Stock up 7.8%. Nothing out of Norwegian descended higher by 6.23%. Marathon MRO was upgraded on the 7th at Tudor, Pickering, and Holt. Maybe some follow through there as people kind of dig into that report. Oxy was downgraded on the 7th at MKM Partners. I did not see the note. Maybe a little bit of a rebound here yesterday. Remember, Oxy has Carl Icahn involved on the activist side. So that's kind of interesting as well, up 5%. Etsy traded at a 52-week high. Didn't see anything company specific, up 4.5% yesterday. On the loser side of the board, a lot of the pandemic winners rolling over. Remember last week we looked at ITB, home construction? Well, Lennar, D.R. Horton, Pulte, Leggett and Platt in that supply chain. AutoZone is the only one really company specific had earnings. Lennar, after the close last night, Lennar, DHI, and Pulte caught initiations from UBS. Lennar was initiated at neutral. D.R. Horton, DHI initiated at buy and at top pick. And Pulte was initiated at buy. That was after the close yesterday. So those initiations not impactful on these numbers here. We'll see how those stocks trade today. Let's take a look at sentiment. Still very bulled up. I can't even. I like nothing I've ever seen. This is a 5-year chart of the 13-day moving average of the CBOE equity put call ratio, and since May, it's been in a state of excess greed to varying degrees. Now it's at the most extreme it's been, obvious since this move lower started in May, and at any point in the past 5 years. We use the 13-day moving average to kind of smooth out some of the noise there, but the message is the same. Options traders remain bullish. You've seen it. The call buyers are everywhere. So I said, like, this is the bear case. The bear case is sentiment at this point, and it's sentiment. You want to be mindful of it, but it's a tough timing tool, right? You could have said that the bear case was sentiment at any point since May, and the market's done nothing but, kind of grind higher ever since. At the same time, the VIX continues to come in, but stubbornly holding above 20. That's kind of interesting. A couple weeks ago, we were at 40. Now we're back at 20, but not cracking. So that we've come in a bit, certainly moving in the direction of more greedy than fearful, but not cracking down to the mid and low teens that you would normally expect to see with the S&P 500 trading at all-time highs. So interesting. Just kind of shows you that it's still there in the back of people's minds. I think there are still, people still waiting for that shoe to drop. And the news is there that can make you feel that way. But until trend breaks, to be bearish is to be wrong. Dow's within striking distance of all-time highs. Did not close at an all-time high yesterday. DIA, the diamonds here. SPDR, Dow Jones Industrial Average ETF. I don't talk about this one a lot, but the simple fact of the matter is the major markets in the U.S. are all trading at or near all-time highs. I mean, you want to talk about breadth. You want to talk about involvement, right? Remember back, March and through the summer, a big part of the bear thesis was the narrowness of leadership. It's only 5 stocks. It's only the fan mag and stocks like it. If that's your thesis, or if that was your thesis, it's been kicked out. It's been debunked. I don't see how that could be your thesis any longer. If that was your only thesis and you're still bearish, you got to check your kind of intellectual honesty at that point. What I see here, this is the Dow trading above its 50 and 200-day moving averages. If I wanted to kind of pick on it a little bit, I would say that the RSI is not confirming the recent highs. Okay. Scooter at the bottom there shows you, however, that it is not leadership. Kind of an inline to slight underperformer. But the simple fact of the matter is, on an absolute basis, the Dow is within striking distance of all-time highs. And I like this one because I think the equity strength is a global story. We looked at Brazil yesterday. We've looked at Japan. We've looked at China. Take a look at Russia beginning to outperform. Russia. This is the ACWI ex-US ETF trading near an all-time high. Confirmed by momentum with the RSI top in bullish ranges. And take a look at ACWI ex-US, ACWX relative to the S&P 500. Starting to break topside from a downtrend that's been in place for almost 2 years. It's a global story. The equity strength is global. So for those who are looking for the best relative strength, some of it's outside of the US. There's no two ways about it. And I think you should be paying attention to that. That's going to wrap us up for today. Take us for a test drive, jakenanalytics.com/test drive. I'm back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.